And welcome back to Bitcoin Advisor channel. My name is Chris. It is CPLie Tuesday. Let's jump into some of that economic data as we're getting a lot of volatility around here at 5:30 a.m. as that data was released. It's 45 minutes later. I guess I wanted to sit in and watch and kind of let my trades come to fruition, needless to say, and follow up on a couple things I did on a live stream last night. In the complex world of Bitcoin and macroeconomics, we are here to give you a bird's eye view from the macro level down to the micro level. We're going to marry the two together and let them have a little baby and give you the best education we can every single day. I hope you enjoy the video. Jumping right into Dixie, as I did say this last night, is you would probably see an opposite reaction to what the dollar does first. And what I meant by that is, look, if the real move was going to be down, right, we would have saw the dollar come up and then come down. Vice versa, what's happened here is the dollar went down and now it's going up. And I think that is probably going to be the general trend. And I did say last night is, hey, regardless, based on the week, the 2-week time frame confirming that hidden bullish divergence on the 2-week time frame, very likely going to get a stab up to 105, but we're going to wait till a daily closes above 105 to get the real move on the dollar. The mean reversion bounce. It is time to bounce for the dollar, and overall, this was just a backfill on the 2-week. And again, you can see it on the 4-hour here. We had a nice little move down, a wick down, now a wick back up. And yeah, if we do see the dollar close back above even 103, I'd expect a shot back to the top side of the range. And when the dollar has been going up as of late, risk assets have been going down. And that is just right in line with our overall bias that Bitcoin does come down a bit more to our target. Let's see, the green box of peace and prosperity or death and despair. Above the green box means generally good, and below the green box, generally bad. And I was on live stream last night. It's a lot harder to do things on live stream because you're just shooting from the cuff on everything you do. But overall, I had to move my box a little bit on another chart. Why was that? Well, I did a retracement from this high to this low, putting in the 0.5 in the 618 or the 0.5 in the 382 right in this region. This is where my first box was drawn. However, if we kind of realign things, and so there's kind of two areas I'd be looking at from this low to this high on a bullish, on a bearish retracement, excuse me. There's where you're 0.5 to 618. So if you're a little more conservative, you're looking for a higher low between 19 and 20,000, a little more aggressive, a little more patient. You're waiting for that higher low somewhere between 18, on this chart. So we got the Binance chart and the Coinbase chart. And hopefully this is making some sense for you guys, but the 382 is the same as the 618. It's just on a bullish retracement versus a bearish. But yeah, using this high to this low, which is more in alignment with kind of the, call it the weekly range before we broke it, right? And once you break that range, that is when you'd expect a little bit of a retracement, and generally speaking on a bullish retracement, right? So if you break the range, taking out this wick, really you want to put your higher low in somewhere in this region. This is your last line in the sand, generally the 0.5. And this is the last of the Mohicans, like I said, at the 618, coming in at 18,000, call it 18,300. Could we get a wick into this area? Absolutely. This is massive inefficiency. All the liquidations did not get taken out or taken in place, whatever you want to call it. There's a lot of trading that needed to be done, and this just girthy green candle to the moon, right, right up and away. So I got to figure out a better way to say that, but I'm sure there is. And anyways, getting into that economic data, which I said I was going to do at the beginning of the show here, the CPLie, and all I could say is I don't know how they come up with these numbers. It's completely unfair that the Fed can revise the numbers down. Hey, funny thing, you notice the Super Bowl did not play any crypto commercials this year after all the FTX shenanigans. Needless to say, glad we were unaffected by that. Okay, so back on to the CPLie. So the year-over-year inflation, this was the big miss right here in my book. Year-over-year inflation coming in. So it came in higher than expected, still lower than last year. Is that right? Year-over-year. No, so they're just looking at this as a month by month, right? So core inflation, that came in at a staunch, or whatever they call it, where it's even money. And then who knows what this stuff is. Needless to say, this was the one to be watching, is the inflation rate year-over-year change from January 6.5 down to 6.4. So essentially what that's saying is if every month you add up, the average came in for January at 6.5. For December it was 6.5. For January it was 6.4. So it's down slightly, but higher than expected. Not anywhere near what Jerome Powell's talking about, inflation just going right back down to 2%. So again, this is in line with 2 more rate hikes this year, which the terminal rate's at 4.75 right now. 2 more rate hikes at 25 basis points would put us at 5.25. Fed Logan speech coming up in an hour and 40 minutes. Guys, we're talking about the biggest banker Ponzi scheme in the world. They get to adjust the numbers however they see fit. So don't think that they have some kind of master plan going on here to, slowly spank and slowly encourage the market to go up and down and sideways to whatever their pleasure is. And again, what I said on the dollar is, and the markets in general, is the first move down, you should see an opposite reaction after that. So these people that were going long get liquidated, and then the people going short get liquidated, and then the real move happens. So now that we've got kind of the range here, I'll just mark it off real quick for Bitcoin at 21,931 to the upside and 21,500 to the downside. A closure above or below there is going to get the next general move. And I'm already seeing this, this 22.3, which is our previous breakdown region. So if we do get a 4-hour closure above here at 22.1, call it, let's go back here. Yeah, 22.1 to, that is a little more conservative on the hourly. I was looking at a 15-minute time frame. Is that good enough to get it? Probably not. A 15-minute, I'd be waiting for at least so the 15-minute will bleed on into the 4-hour. I do believe that. So a 15-minute above here, very likely going to get that next move up to about 22.2. And that would just be a retest of kind of the breakdown area, which was 22.3. And essentially, what do we see? NASDAQ coming down, Dow's up 39, S&P's down 8, and the dollar's down 0.1%. And I'm expecting a bit of a bounce out of the dollar here from this region again, which would play out for more downside on Bitcoin. Next stop down looks like the next kind of critical area is going to be 20,500. if we start to lose this region, the greater targets shall be hit. And actually, I would expect this move to happen within the next couple of days, if it's going to happen. And something else to note here, okay, on the daily time frame, if this kind of downside move is going to play out, we want it to happen a little bit sooner than later. Why? Look at the stochastics. They will cross up today above 21,700. So we're sitting right on the edge there at 21,678 right now for spot price action. And CME's a bit of a different picture, needs to get above 23.4 to cross back up. So could this possibly be one of these times where we kind of slink around down in the critical zone, just as we did up here, right? We spent some time with, Bitcoin just kind of slinking around, crossing down. I mean, we crossed down right here, and we got to move up. So it took, a few drives of hidden bearish divergence for that to kind of play out. And essentially, we're getting the, if we can confirm this as a local low, we will get a few drives of hidden bullish divergence. 1, 2 drive variety should give you a shot up to that 22.7 region. So kind of a lot at stake here. Let's take a look on the weekly time frame. To me, again, this looks like more down, more likely down than not. And if we do close this week, today is CPLie Tuesday, not Taco Tuesday, not Valentine's Day. It's CPLie Tuesday, and how much more can they lie to us is the big question, and I'm glad. Let's just, this was a great little piece here I saw on CPLie Day. So good time to remember CPI's manipulated metric tweaked to hide the crime of the money printers. Yes. Quote, the true inflation rate is not CPI, but rather asset inflation rates. Rather, the asset inflation rate. I think the inflation rate for the past decade is actually 20%. That makes a whole lot more sense. And that's right. A direct quote from Mr. Saylor, the horse himself. Dan Held, another one I really like. Would love to see the metrics. I almost never get tipped with 650,000 followers. Happy to a video of my data. That wasn't a good one. Dan, I just gave you a shout out, and that was not a great tweet. What about Wifey? What is she saying? The Wolf of all streets. Oh, he's got the Doggy coins coming up. Doggy coin to the moon. Should we check in on Mr. Doggy? I know I said I would do it yesterday, and I did not get a chance. Doggy down 0.5 point on the weekly, almost a bearish engulfing, and looks like Rupert and Elon talking it up at the Super Bowl didn't do much for Mr. Doggy coin over the last day. Anything happening? Again, a lot of these assets, when you get the daily Stokes to finally cross up, but they're in the critical zone, so no party yet. And again, that, we've been talking about this all week long. 20% move to the highs takes you down to that green box. And we got expansion, but as soon as these cross back up today, possibly today, we're right on the edge of our seats. I would be waiting for CMEs to call the move over. In fact, we still got to fill that gap. So 20% down is actually a little bit higher. So maybe we should be looking for this area to get tapped. Yeah, that looks a lot more convenient for Mr. CMEs. And when did this move start? So if it started here, we're 1, 2, 3, 4, 5, 6 days into this move. Look how many days the last expansion took. So something to note. And, you know, the last time volatility compressed for this long, right, the last 2 times, we got essentially a bigger move, right? The longer it compresses, typically the longer the move, or the bigger the move, needless to say. We didn't compress for very long, but as long as these are down, and I imagine it will change pretty rapidly, then you'd expect kind of more continuation of the downside. As well, we're right on the edge of the bullish control zone. So what will happen is if we do take out this low on the RSI, which, by the way, look at this trend line getting broken right now. Let's see. Is that a really good trend line? No. You need 3 touches to make a trend. Is this 3 touches? No. But it is breaking down. Breaking down for Mr. RSI. Essentially what I was saying is, look, if this gets in the bearish control zone, it is not going to look good for bulls. And if we do take out these lows here, let's see. Yeah, you'll have, so any kind of a higher low up in this area is going to create some hidden bullish divergence where the price is making a higher low, the RSI is making a lower low, and I would expect a decent bounce coming out of that. So again, sticking with my guns here, opposite move, dollar up, and risk assets down until that trend changes, until we get a different trend than that. I would suspect more of the same. Let the trend be your friend till the end of the trend. Let's check out Ethereum, hanging on by tooth and nail. And this one is, going to do whatever Bitcoin does. So suspect if Bitcoin's going to come down and tag that wick, well, Ethereum probably does it first. And with all the bad news, that's what I wanted to bring up here today as well. 17 minutes in this video, and we're going to get out of here pretty soon. All the regulation going on is not essentially... If Kraken gets sued by the SEC and unstakes all the United States customers, Ethereum, not going to be good for Ethereum, in my opinion. Not good for America. They're going to stifle more innovation in the States. And shoot, I think everybody wants to get out of here at this point. If we see another election of the leftist mafia and their new software program that's going to be designed to track you everywhere you go and make you get a shot in your arm that's going to end your life early, why would you want to stay here? I have no idea. The police are garbage, right? Let's look at Los Angeles. And I'm sure there are some great policemen out there, and there's some people that fight for good. In every company, in every place, there are good. Let the lights be light. But it just doesn't make a lot of sense when you have, cops running around in their little cars and they're giving people speeding tickets when they could, and I'm sure there's a place for it, speeding tickets or whatever tickets. But go get the bad guys, right? There's enough bad out there. Go get the bad guys. Stop letting the bad guys bring meth over the border and heroin and all this stuff, Go get the bad guys. Stop working on the little, common people so you can get your bills paid. Go stop the bad guys. No, but they don't stop the bad guys. Why? Because it's obvious that, and that's my last comment on Twitter. I saw this. It reminded me, essentially, what does this remind me of? Tether supply. So Tether is only one of the top 5 stable coins by market valuation that has seen a supply increase in the past 3 months. So let me explain something to you guys. My theory about Tether. Tether is the crypto, Tether is the crypto, what are the guys from Mexico that are really bad gangsters? I can't think of the name. The Cardones? No, it's not the Cardanos. No, the cartel. Yes, Tether is the crypto cartel. Why do I say that? Well, all the leveraged exchanges are run mostly off of Tether. That's where most of the money gets made. The biggest money makers, leverage exchanges, right? Set aside Coinbase, it's ripping off everybody in the States. Tether is the crypto cartel. So they're probably the most safe. And guys like Gary Gensler that are getting their hands mixed in with crypto and the crypto cartel, they're going to get spanked by the cartel. The cartel does not care about your family, does not care about good or evil. They care about one thing, and that's protecting their money. So I would say Tether's probably going to be stronger than most if you're, and again, this is just personal opinion about magic internet money. Forget what I say. Take it with a big fat grain of salt, wash it down with some mouth water. And just look, Tether's increasing market cap valuation. Are they printing more Tethers? I don't know, but all the leverage exchanges where everybody likes to go gamble their money, this is the coin of choice. It is the ultimate pairing, and you know, at some point, yeah, convert your Tether in for gold, right? But I don't know. I think there's enough rambling for today, guys. Hope you have a blessed one. A blessed and highly favored day. What are all the doggy tweets happening today? Peer-to-peer cryptocurrency, Shiba's worldwide. A mouse, as a mouse owner. Baby doggy. Doggy coin. Yep, that's pretty much it, guys. Doggy coin 75 cents. All the sheep are going to the slaughter. Doggy coin at 7 cents. Nobody wants to buy. What is Doggy coin at today? I'd be willing to bet Mr. Doggy coin, and probably, you know, probably not a bad buy long term at 10 cents. You know, if you're going to hold it for another 20 years. Other than that, if Doggy coin starts to break down below 7 cents, well, you can see there's pretty much nothing. It's air. And I can't wait for the big downside move. Yeah, so this is the line in the sand for this one. You know, 437, and it's free fall time. Free fall time. Oh, boy. So, take while hit inflation target. Yeah. Thomas Barkin, Rich. I'm going to watch this speech, this guy. All right, take care, guys.